Welcome to another episode of Boots on the Ground with the Janys. Now, today we are going to address this very interesting ongoing debate: leasehold 99 versus freehold. Which do I buy? Where are my prospects of capital growth better? What should I buy? So, in order to address these, there's a disclaimer here. We are just relying on whatever data we could get, which is published on the public websites. Now, having said that, the data, I've looked at it, it's quite interesting, but Sharon, let's drill it down and let's see how these two fared last year.
All right. So we'll be taking a look at quantitative data at the beginning, and then after that, we would be going more into kind of opinions where it's a bit more of a qualitative data. Let's get started on how freehold and leasehold has fared over the past year. So the disclaimer is that the information that we have is actually from sources such as URA and SRX, and so I cannot guarantee that it's entirely accurate, but this is the best that we can do. So for the comparisons, I will be taking freehold, and for leasehold, it would just be on 99-year properties, and this would be for all condominiums and apartments in Singapore. So the first thing that I've done is I've actually compared the whole region of Singapore. I have split between freehold and 99-year. So as you can see in the graph, right, the freehold in general has outperformed the leasehold properties in general, where you are transacting at 2,410 per square foot on average, compared to 99-year leasehold at 1,738 per square foot. Average price growth rate 26% for freehold and 15% for leasehold. When I actually drill down on this data, I did see that the recent surge in prices is actually maybe due to the new launch segment, because in the month of January, there were about 17 transactions at Leaden Green, and as you know, Leaden Green is one of the bigger projects in District 10. It is freehold and has been constantly selling well for the past few months. For the leasehold segment, best-selling projects are actually the latest one that had just launched this year, which is Seneca Residence. It has about 157 transactions in this month, followed closely by Tenet with 144 transactions. But as you can see, because these are actually from districts 16 and 18, so you would have a sort of lower average per square foot versus Leaden Green, which is in District 10. So that is for just in general Singapore's performance for freehold versus 99 for the past year. So if I were to compare just the freehold in general, I split it between the new launches in Singapore as well as the resale. What we get is this very interesting graph where actually the freehold new sale properties, they are at a growth rate of about 21% average versus the 15% of freehold for all the resale properties. Translates to a difference in pricing from 2,916 per square foot in January for the new launches versus 1,884 per square foot for just the resale.
Well, so that's almost like a 1,000 square foot
difference. Yes. So what I can see in this figure also is that actually the prices of freehold property do hold up pretty well over the time. So it's actually still growing at a consistent rate. So that is what is more important actually.
But also there's one thing here, based on last year's sale, I think there was a rather limited stock on the resale properties as well, especially for freehold. So this kind of statistics can be affected by, just small nuances like this. So be careful when you look at, broad data, because it may vary from district to district. You may even have, two properties in the sort of same vicinity, but because, as you will later see, they're just in different postal districts, you can't really generalize data based on these graphs alone.
Okay, so that would be for freehold. So I will do the same for 99-year leasehold properties, where I split it between the new launch prices versus the resale for the past year. So what I see is for on average, the price in January is 1,955 per square foot for new launches and about an average of 1,390 per square foot for resale. So what really strikes me actually in the graph is that there is a big dip between September and October for new launch prices. When I zoom in to check why this is so, is because for September, the biggest sales volume was actually from Lentor Modern, and that was actually transacting at an average of 2,124 per square foot, whereas in October it was Coupon Grand at 1,339 per square foot. Now these are from different districts, and that contributes to the big difference in average pricing, and therefore you have this dip in the pricing for the new launch sales in the whole of Singapore. Also, if you talk about the growth rate, I think for the resale for 99 years, it's still growing at an average pace of 10%, which is quite healthy sales as well.
The volume is larger of course, on the new projects.
Yes, that's for sure. What I have done next is actually I have kind of split it into the different regions in Singapore. So namely, I will be focusing on the core central region and the rest of central region. Now the core central region actually consists of the areas where you would actually put on this picture here so you can see. So these are the areas that constitute the core central region of Singapore. So what I will do now is actually split it between freehold and leasehold so you have a better picture of how this area is performing. So now in this region, what I like about it is actually it gives you a clear picture that, oh, actually if I were to buy leasehold and freehold, we're talking about a difference in average per square foot about 200, I would say, on average. So in January, leasehold was 2,723 and freehold was 2,979. So they were both growing at a same consistent average rate of 15%. If you were on the ground, you would know that freehold always commands a slightly higher entry point. But the nice thing to know here is from this graph, what I can interpret is that they are both growing at the same rate. Yes. So now comes the interesting part. So what I have done is I have done the same thing but in the RCR region. Now the RCR region consists of a larger pool of districts, so I'll put it on this picture as well so you can see where exactly the RCR is. You can see in this graph, the leasehold is actually growing at a better rate than the freehold. So now this is a bit like counterintuitive. The per square foot in January for leasehold was 2,224 per square foot, whereas the freehold was actually transacting at 1,853 per square foot on average. When I look into the data, one of the reasons for this is actually because some of the new launches for 99 years, they are moving at a very high price for this region because we have projects like Rivière and the Landmark, which are pushing the average per square foot much higher for the 99-year average. So these 99-year projects, if you were to look in the map, actually Rivière and the Landmark, they're actually at an area where it's pretty close to River Valley, District 9.
Yeah, it's actually almost just the opposite side of the river is District 3.
Yes.
So it's quite amazing that, you know, there's such a slight gap only between these two districts.
Yeah, so that could contribute to why my data for the RCR region is showing that the leasehold is actually outperforming the freehold, because if I'm not wrong, there were also not many freehold projects that were launched in the last year as well. So that could contribute to why their leasehold properties for the past year has outperformed the freehold.
Yeah, so most of the new launches are 99 years. And and there's quite a lot of them which are kind of like luxury properties as well.
So that will be all the graphs we'll be covering for today. So now we will move on to more of the kind of open debate or more of the qualitative data. So it's a bit opinion based. So don't get offended if you have a differing opinion. You can always leave it in the comment section below, and we would like to hear from you as well.
So the basic thing in Singapore, 99 versus freehold, I think the debate really starts if the lease runs below 60 years, right? Because then you have different restrictions. So if you can buy anything with a leasehold of at least 20 years, but the proviso is that the youngest buyer plus the remaining term of the lease must add up to 95. This has an indirect effect on the secondary market, because especially if you have a short remaining lease and a young buyer. So they basically will not be able to buy unless they use cash. And these are young buyers, so they obviously would want to use their CPF savings. Now, the oxymoron here is that you remember there was this transaction in Tiong Bahru, $6,200 monthly rental for an apartment which it was 73 to 74 years old. And it was just amazing. So imagine if somebody bought that apartment, he's got a fantastic return on
Yes.
his investment. So there's really
No hard and fast
no
rule.
hard and fast rule. But what you will not observe is that for certain areas you may have 99-year leasehold, which, like in Tiong Bahru case, it's a conservation. So people buy it for the inherent value that it's not everything can be sort of broken down to dollars and cents. There's some soft touches here. And then you will go to an area which is predominantly freehold in District 10, and you have a 99-year property, and for some reason there's nothing wrong with the property, but it's just not as popular because in that district everybody wants to buy freehold. So
Yes.
again, there's really no hard and fast rule. I've also looked at the various data. There's various articles enumerating the reasons that some properties were even sold at a loss last year. And why is it so? They've quoted various reasons: lack of research, not understanding the master plan, lack of
Nearby
amenities, and buying condos just for investment purposes. So there's a host of reasons, but I think a lot of this data actually overlooks the fact that there are some people who see an buying opportunity, and they are in a stage where they want to move from house A to house B. Now, in such an instance, if I see an apartment which sort of ticks 9 out of the 10 boxes, it's a perfect property, it's a resale property, I don't know when the next one is coming up.
Yes, I agree. Yeah.
So in that case, what do? I don't mind to take a slight haircut on my property because I'm looking at the upside potential. Now, the same thing applies if, for example, I have a property which is not really appreciating in line with what we call the private property index. So it's kind of lagging behind. Maybe I'll have a better opportunity. Let me reassign my finances to another thing. So again, I don't mind buying one of these properties and selling at a loss. Now, by the same inference, you will have projects which, by and large, if you look on paper, they're so-called losing projects, and I think we don't want to razz any or sort of single out any projects, because all that is, you can read it up online, which are the projects. But on the other hand, because they are selling at a loss, that presents a kind of buying opportunity, because the person who buys it may then appreciate a run-up in prices. So again, there's really no hard and fast rule. Property is like any market. It's very subtle, it has its nuances, and it is predominantly driven by human emotions. So whichever way you analyze it, there's no 100% answer, and I don't think anybody can guarantee you that, okay, if you buy in this location, this project, you're guaranteed to make money. There's a bit of a guessing game, but the big plus in Singapore is that I would say 70% of your property value actually comes from the infrastructure the government puts in, right? So, they announce master plans, there's changes, there's certain upgrades in the master plans, they give developers certain incentives. So what that does then is, basically, if you buy in that zone where some new announcements are made, just think back when Marina Bay Sands was announced, right? Nobody knew it's going to be there. Nobody kind of foresaw that capital growth. But then again, in that region, you have one project which is kind of lost value. So again, it also depends on the timing. right? It doesn't mean that, I bought at this time, I hold it for 3 years, 5 years, whatever the years is, I will make money. No, it doesn't quite work like this, and I don't think there's actually a proper, like a property cycle where you have a certain number of years that property values will go up. It's a bullish time and it's a bearish time, because there's just so many different variables in this equation. It's not purely demand and supply. In Singapore, you have the influx of people, right? Now we have a lot of people coming into Singapore, that a lot of them are high net worth individuals. They are buying properties for their own use, and they will pay basically the sticker price. So you will see one transaction which is 30% above the previous transaction.
So what do you think of this thing where everybody is talking about the first mover advantage, and that's actually what drives people to kind of put their bets on the new launches versus buying a resale, because they always use this term, okay, I'm going to buy because I have the first mover advantage.
So what I've observed, I think it's an international thing, but it's predominantly an Asian thing. A lot of people like to move into a brand new house, a house that nobody has lived in before, because then the house has got no history. You don't have to worry if somebody passed away in that property, you know how it goes. If I bought a house, right, off the plan, and then you come along and you're newly married and you want that brand new place, then you will not want to buy a new launch and wait for 3 years. You want to buy something which you can see. So a lot of people buy a house which has just TOP, and of course, if the market is in its upward swing, obviously the first person who bought it is going to make money at the expense of the second person, right? So
yes.
It's kind of like back in the old days when you bought certain cars, it was the same thing. I would also say, look at the overall area, look at the master plan, and look at the specifics of the project. And again, there's no hard and fast rule whether it's a big project, small project, because there are nuances. But of course, if you buy something which is slightly more sizable, near an MRT, you've got full facilities, you tend to have a slight advantage over, those smaller boutique projects. But then for the boutique projects, you have buyers.
There's a group of buyers that want boutique.
They something.
They don't want to have kids running around. They just want to have peace.
So again, it's to each his own.
Yes, I agree. Yeah.
Okay, so I think that's all for what we have for today. We'll see you on the next episode, and do leave what topics you would like us to talk about in the comments section below. I'm Richard.
I'm Sharon.
We are the Janys, and we'll see you on the next one.